In this episode of the Newsletter Recap, we will show you just how DePIN lays the smackdown during bear markets. But first, let's watch Michael slapping a bear.
Yeah, looking for that dog with hat. Yeah, looking at bears with hats now. Yeah, whiff. Yeah, that was a whiff because you missed. I'm looking for the ROI. Okay, putting that one in your sights? No, I don't think so. What's over there? Was that your returns? No, I think that's a bear. Is that a bear? Oh, it's a bear. Hands ringing after slapping that bear market back to where it came from. That is the palm of decentralized physical infrastructure networks slapping justice into the wild west of crypto. And it has been wild. It's been a little bit since our last episode of the Newsletter Recap. And in the past month or so, markets have been turbulent. It's like we're walking on quicksand. The fear and greed index is consistently hovering under 40, like I wish I was. And the Bitcoin chart is looking like a roller coaster gone rogue. So the question that we're asking ourselves, and you may be too, is what happens to DePIN when the market conditions turn bearish? Don't get scared, DiCaprio. Open up your eyes so you can see the light at the end of the tunnel, because what we're looking to is past the speculation to the fundamentals. In this recap, we will walk you through an analysis of how DePINs perform during previous market downturn and why real-world utility and real revenue streams create natural price floors that are resistant to bearish conditions. And we'll use our friends at Mawari as a great case study. And finally, a data-driven breakdown of what separates the survivors from the casualties when market sentiments turn bearish. So, before we do that, let's jump in and see what's been happening recently in the news. 1 month ago, new data was revealed that 3AC, which is the hedge fund attached to FTX, had actually liquidated about $1.5 billion of assets a week before the FTX collapse. That means that the creditors who are trying to claim back the original small sum of $120 million are now trying to increase it to $1.53 billion. So good luck to you, FTX and 3AC. Next up, our friends at Aether, the poster child of DePIN plus AI. The ETH token has recently surged in price, or at least 1 month ago it was, when they got listed on Coinbase. And on top of that, in case you missed it, there is a current Binance listing vote to also get ETH on Binance. So go out and support our friends at Aether. And now for the feature. Bear market signs and why DePINs are laughing all the way to the bank and bear slapping them right back to where they came from. So, our feature today reveals how tokens backed by actual revenue and real-world utility and physical assets as well create a protective economic moat even when conditions are bearish and most typical speculative tokens are crashing. Now, why is that? Well, speculative tokens might get eaten alive by the bears in the woods during market declines. DePIN projects offer a fundamentally different, pun intended, model based on actual economics, physical assets, and real-world utility. For example, if you recall, before this recent extreme tumultuous situation began in 2025, in early 2024, the market was also fairly volatile. During this time period, DePIN projects actually grew in market cap from 20 billion to 50 billion US dollars worth. At the same time, what's even more interesting is that real-world revenues grew from 2022 of around $100 million to $5 billion for these DePIN projects. Here's an example that should be familiar to you. Remember COVID a few years back?
The mysterious new virus.
Coronavirus.
There are fears a rapidly spreading virus.
The whole world was looking for economic life support, government bailouts. Everyone was talking about a recession, maybe even a depression. But if you look at tech companies, such as those providing streaming services or real-time communication like Zoom, they exploded. Did people stop learning? No. They doubled down on education from their homes. Did they stop playing video games? No. Video game usage skyrocketed. And what was powering all this? Internet connectivity. Now, think back about DePIN. What do DePINs do? They provide things such as telecom connectivity, video game development platforms, content distribution networks, and real-time communication platforms similar to Zoom. That's what DePIN literally does. So even when the market is doing this, as long as real-world demand remains and even grows, then that means in the long run, those token prices should surge back. Obviously, the market can suppress prices for a while, but when your token is backed by some sort of real-world utility and actual revenue, in the long run, things should balance out.
Whole life have a balance.
And so now, we will give you 4 reasons why DePINs behave fundamentally differently than traditional speculative digital assets. First and foremost, as we've already touched on, utility-based revenue models, aka these projects actually make real money. Number 2, physical assets backing the token value. Think about things like radios, servers, hardware. These things actually create a natural price floor that purely speculative digital assets will never have. Numero 3, counter-cyclical cost advantages. Blah, blah. What does that mean? What that means is during bearish conditions, things like talent actually become cheaper. And there's more people willing to take on side hustles to make extra money. The cost of certain hardware and shipping might also go down, which means that during a bearish market may actually be the best time for a DePIN to expand. And finally, number 4, long-term sticky revenue. When you're dealing with infrastructure, you're also talking about high switching costs. Think, for instance, if a company integrates with Mawari's spatial computing network, just due to a bit of market turbulence, are you going to change your entire global node infrastructure, including pilots you might have ran, IP that's involved, contracts, NDAs, etc.? Probably not. And those high switching costs create long-term stable cash flows for the healthy DePIN projects out there. Now, let's be clear. DePINs will still ride the token roller coaster. There's no denying that. Prices are suppressed. You can go back and look at Amazon during the dot-com bust. They went from $116 with their stock down to $9. But give it some time and look, where is Amazon's stock now? What's important is that many speculative projects might disappear entirely during bear markets, whereas DePINs might go back a little bit into hibernation, but that's the time to build. And if you have the patience to wait for the markets to start to bring back that uptick, you can cash in on those rewards. So sometimes it pays to hodl, my friends, if the project is healthy. And that's exactly why it's important to monitor which DePIN projects have a healthy team, community, business model, tokenomics, etc. And we've created a little program to help you in that work. Check out the purple badge on DePIN Hub. Those verified projects denote projects that have been transparent, that we've already conducted due diligence on to help you identify the healthiest of those DePIN projects who can survive the bearish conditions. Now, let's look at a little case study. AI agents. You've probably heard a lot about AI agents. Now, if you remember, towards the last half of last year, everything was about AI agents. It was pushing up the whole market. You were seeing tons of activity on Base, the L2, also on Solana. It all really started earlier in the year with Luna, which skyrocketed 1,400%. Then you were seeing the Eliza OS framework, and all of these crazy AI agent frameworks started coming out. Everybody wanted to launch agents. Everyone started getting more and more abstract about how to use them. But at the end of the day, how many launch pads do you need to put out an agent that's shooting out song lyrics on X? And how much is that actually valued at? As things became more and more speculative, what we saw was that the entire AI agent craze essentially crashed, and most of these projects lost 80 to 90% of their value. But does that mean that the value of AI agents has also disappeared? No, it's actually quite the opposite. The value is still there. McKinsey, for example, predicts that AI agents will automate up to 70% of service jobs in the near future. Forbes went ahead and just declared that, hey, SaaS is now dead. And the Wall Street Journal reported that 62% of Fortune 500 companies are already implementing autonomous AI agents. So obviously all of those tailwinds are still here. The value is still there. The real question becomes, Are these crypto projects taking part in the value creation, or are they just trendjacking the word to ride a speculative wave of magical Web3 fairy dust?
Fairy dust. It doesn't exist.
Which is exactly why projects such as Mawari that are looking at not just how to cash in on the AI agent trend, but actually propel it forward by bringing those agents into 3D, actually innovating upon the model, are so interesting to watch. Follow the value, my friends. And if it leads you into a dark forest by yourself and you start seeing bears running at you, as long as the value is there, you can slap them right into submission. In case you weren't aware, DePIN Hub has a podcast. It's hosted by the man, the myth, the legend, the one who eats charged capacitors for breakfast, Daniel Andrade, and he's already recorded over 70 episodes. That is a streak. Now, if we jump back to episodes 65 and 66, you can catch an interview with the CEO of DePIN Labs, David Garrett, who's integrating blockchain technology into the $1.8 trillion global wine industry. Kind of a mix of RWA and DePIN. Super interesting. You should check it out, especially if you're into wine. Then in episode 66, we're going back into the world of DeWi with a global carrier-grade mobile provider known as Carrier One, who is integrating blockchain and DePIN technology into their network. The interview is with Nahid Masad, the co-founder and chief strategy officer of Carrier One. Check that out as well. Show our co-founder, Daniel Andrade, some love! So, ladies and gentlemen, while the silver lining may be barely visible to some, especially meme coins and certain other crypto ecosystems, in the eyes of the DePIN oracles, we can see clearly now the rain is gone. We can see bright, bright, bright tokens all day. Tokens. And I'm wishing you, my fellow DePIN revolutionaries, many bright, sunshiny days like this one in Lisbon, Portugal, in your near future. Until then, stay decentralized.
I can see clearly now the rain is gone. Gonna be a bright